San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Apple shares take a hit after it reports lackluster results, and the iPhone maker says it's no longer going to share exactly how many iPhones it's selling. We'll talk about the tech giant's next era. Plus, Alibaba blames the global economy for its earnings miss, saying conditions are in a state of uncertainty. We hear from Alibaba Executive Vice Chair Joe Tsai. And mass walkouts at Google prompt promises of change. But CEO Sundar Pichai says he's still in the driver's seat. We'll discuss the state of leadership in Silicon Valley in the face of employee uprisings. But first, to our top story, stocks extended declines as Apple's poor forecasts hit tech-heavy indexes. In its fourth quarter, Apple said iPhone sales barely grew from a year earlier. At the same time, Apple said it would stop providing unit sales for iPhones, iPads, and Macs in 2019, as it takes a step towards becoming more of a services business. And while some analysts are praising the move, others are unimpressed. Here to talk about all of it, Kevin Carter, founder of EMQQ, the Emerging Markets Internet ETF, and also with us, who else but Bloomberg Tech's Mark Gurman, who of course covers Apple. So Mark, walk us through the reaction to Apple's surprise decision here to not report these unit sales numbers, which is what we as journalists are always fixated on.
Yeah, like you said, there's two sides of the spectrum, right? There's one side that's basically agreeing with and believing Apple's company line that this does not provide an accurate picture of their business and they're becoming more services focused. Then there's the other side of the coin, which I fall into and completely believe, is they just don't want to report negative year-over-year unit sales drops or 0% unit sales growth anymore. It's not a good look for a company that's so PR and marketing driven.
Kevin, what do you think the implication of this is? I mean, obviously we know that the smartphone industry is dramatically changing. There is one analyst who said it's in a recession. But what do you think the implications are for Apple that they do not want the public to know what these numbers are anymore?
Well, I think, first of all, I mean, what's most important in a business is its revenue growth. So whatever that's coming from, products, services, et cetera. And I think, you know, part of Apple's moat is its ecosystem, right? People don't want to switch and leave to the Android operating system, and it's the premium brand. It gets premium pricing, and that's a blessing for it. But it's a challenge, and it's a challenge mainly in the growth markets. For smartphones, which are emerging markets, where the consumer can't afford a $1,000 smartphone because they might be making it, $2,000, $3,000, $4,000, $5,000 a year. So Android is the system, and the phone makers that supply Android phones are the ones that are, providing the first computer for most of the developing world.
Mark, what are the signals about demand for the new iPhones in the current quarter, the holiday quarter, and knowing that we're not going to get these numbers next year in that quarter, when that quarter reports?
So to me, it was a little alarming that iPhone unit sales year-over-year growth was so small. It was about 0%, rounding down, so 0.02 or 0.3 or 0.4%. Now, why that's alarming is because we had about a week and a half of new flagship iPhone sales during the fourth quarter, whereas last year the iPhone X didn't come out until the holiday quarter. So we're talking about no growth year-over-year, whereas last year we had no new iPhone in terms of a flagship model, and this year we did.
Kevin, what are Apple's prospects right now in emerging markets where there are plenty of cheaper options and Android competition is fierce?
Well, look, Apple's the premium brand. It's the aspirational brand. Certainly in Eastern China, in really every country, there are wealthy people that can afford a $1,000 phone or a $1,200 phone.
And there are cheaper iPhones now as well.
Certainly true, but we're talking about, in India and in Africa, we're talking about $50, $100 smartphones. They're getting better and better every year. They're getting cheaper and cheaper. They may not have a billion pixel camera, or the ability to store 500 videos, but it's Huawei, it's Oppo, Samsung, obviously, although they're facing competition from the Chinese manufacturers. And I'd say they're going to grow. They had decent mid-teens growth in China, but most of the world will have Android phones over the long haul.
Now, Mark, there are precedents for Apple doing this. They stopped reporting iPod unit sales. The iPod slowly became less important. They stopped breaking out Mac versus laptop sales. And we saw that segment become less important, and certainly less important as compared to the iPhone. What are the forecasts in terms of how important the iPhone will remain for Apple compared to services?
So for years, there's been discussion about why it's bad that the iPhone makes up about 2/3 of Apple's sales. And we had a sense of what that meant, given we had the unit numbers. Now we're no longer going to have the unit numbers. We're not going to know what that really means. But from a revenue perspective, we're still going to know. And I guess the good news is, the silver lining here is that revenue is still growing at a remarkable pace, right? But it's also alarming because unit sales were up 0%, revenue was up 29%. And that's assuming. The good news is we should assume that people will continue to buy iPhones in the same amount of quantities. Even if they don't get much growth anymore in the future, revenue is still going to be fairly consistent. And we're talking huge numbers here. I mean, if you look at the Bloomberg terminal and you look out to 2021, 2022, we're talking about a $100 billion holiday quarter coming up for Apple in a few years. So they're not going away. This is a very marketing-driven, PR-driven decision not to see those negatives on the balance sheets anymore.
Kevin, given the trends that you're seeing in emerging markets, if Apple has an install base of 2 billion devices, how much can that grow?
Well, it can't grow that much. I mean, theoretically, there's going to be lots of...
So you think is that an upper limit?
No, I don't think it's an upper limit. But again, the next billion consumers that are coming online in India, in Western China, in Africa, they are not going to be able to afford an entry-level iPhone. It's going to happen, again, on Huawei, Oppo, Xiaomi, and it's going to be Android-based. And it's just the mathematics of it. I mean, an iPhone is an expensive item. It's the premium brand. It's an aspirational brand. But part of their moat is that ecosystem. And so having people, Warren Buffett's talked about this, like the smartphone's a pretty important part of your life, right? And perhaps the most important part of your life. And so would you gladly pay another $100 or $200 not to have to switch from the Apple operating system to the Android system? Probably. But if you're a first-time digital consumer, I think that the decision is easy just because of the economics of these entry-level smartphones that are running on Android.
All right. Kevin Carter, you are sticking with me, EMQQ. Mark Gurman, thanks so much for stopping by today. Coming up, Alibaba reported quarterly earnings well above analyst estimates, but trimmed its prediction for full-year sales by as much as 6%. Alibaba Executive Vice Chair Joe Tsai weighs in on that and the trade war next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Alibaba reported second quarter revenue that fell short of estimates and cut its sales outlook for 2019. The Chinese e-commerce giant blaming macroeconomic conditions, saying the global economy is in a, quote, state of uncertainty. I caught up with Alibaba Executive Vice Chairman Joe Tsai and asked about the headwinds he's expecting.
If you look at our sector, generally overall retail sales is still growing at 9%, and e-commerce over the last quarter in the total market was growing 24%. And we have just reported our Tmall GMV is growing at 30%, so we're outgrowing the market. I think what you're seeing is Alibaba not necessarily entirely hitched to the economy and the consumption trends, because what we're doing is digitizing not only our own platform but also the traditional retailers' platform, enabling our retailers partners to to capture more customers and operate their business more efficiently. That's what we call our new retail strategy. So that's an area where we are very excited about.
Now, you did beat on profit. I'm curious, you are facing rising competition in social commerce from Pinduoduo. There's also the competition from Tencent-backed Meituan in food delivery. What's the M&A strategy amidst these changing currents?
Well, we've always had strong competitors. I think, to use a sports analogy, competition makes us better. It's if you play against bad teams, you're not going to improve yourself. So glad to have all the competition, but they're all in different sectors. There's really not a company that could really compete with us on an entire platform basis across commerce, entertainment, and local services. We now serve 600 million active consumers that are doing business, transacting on our platform annually. So this is, I think, our strength. And again, as I said, as we tap into the new retail space, which is to enable the traditional retailers to capture more of their sales, that's a market that is $5 trillion. So we effectively are increasing our total addressable market to $5 trillion US.
President Trump said he had a very good conversation with President Xi focused on trade. Trade talks haven't resumed, but Bloomberg is reporting that he's asking top officials to start drafting an agreement. What's your reaction to that? Obviously,
any activity that will stave off this trade tension is positive. There's really no advantage to either side, the U.S. or China, to get into a trade war because the two economies are so independent, so dependent on each other. Very symbiotic relationship because they're the two largest economies in the world. So the future is really joined at the hip. So, for example, China is buying a lot from the United States. $165 billion annually of goods, and also another $40 billion of services that Chinese are buying from America. So if there's trade war, tariffs, and so forth, then there's going to be reduced business from American exporters selling into China. You also have 68,000 American companies that are operating in China that are making very good profits. Total aggregate revenue of American companies are $600 billion and another $40 billion of profits. So you don't want that to go away. So it's a good thing that the two presidents are sitting down and they're about to talk, and we hope that some good things will come out of that and the tension will get reduced. Jack Ma said that Alibaba would no longer be creating those 1 million jobs that Alibaba had promised to create in the United States as a result of this trade war. Have to say there was always some skepticism those jobs would actually be created. But if this drags on, how might Alibaba react? Well, remember, originally, the job creation discussion is based on the premise of trade. And the trade flow was that we were going to help small businesses in America to sell to Chinese consumers. So in the wake of all of these tariffs and tensions, retaliatory measures, obviously it wasn't the right thing to continue to stick to that commitment. But if there are ways for the two sides to resolve the tensions, and then we can resume our activities to help SMEs, small businesses, and farmers in America to sell into China, we certainly will come back in and be very happy to Now, the Chinese government has led a broad crackdown on the internet, the gaming sector cracking down on Chinese companies making investments abroad. Do you think that this could undermine the growth that has made companies like Alibaba and Tencent so giant? Well, I think you have to understand what you call a crackdown is really enforcement of some of the regulatory measures in each specific sector. We don't see this as a general crackdown on the internet. I think I can't really speak for other companies, but in our case, a few years ago, people were cracking down on us having authentic products on the platform. We continue to police our platform very well. So these regulatory measures are very helpful. They are meant to protect the consumers. So we operate within that environment, and we comply with the regulations.
All right, Singles Day coming up, always a big day for you. You know, given what's going on in the global economy, what's happening in the Chinese economy, how do you think this Singles Day will compare to the prior ones?
Well, I think this Singles Day, there are a lot of really cool things going on here. One thing is there's totally about 180,000 brands that will be participating in the sale on our platform. It's a great presentation to the consumers. We call this the Olympics of brands. So they will all be there to compete for the consumers. The other thing about Singles Day is we're going to implement further our new retail strategy. So we have partners with about 200,000 physical stores that will be partnered with us in 12 cities with consumers that can go to the store or order online. Today with a mobile phone, consumers could be very flexible. They could be in a store, or they could be sitting at home or their office and order. And you have to reshape your company to be able to serve these increasing demands. So these 200,000 stores are going to participate in the Singles Day sale. So we're very, very excited about that.
Alibaba Executive Vice Chair Joe Tsai there. I do want to talk more about Alibaba with EMQQ founder Kevin Carter. What do you make of the results today in the midst of these global economic shifts and what's happening in the Chinese economy more specifically?
Well, I think the results were great. I mean, again, the company's growing at more than 50% at the top line. There's obviously been a lot of concern about trade wars. That's had a pretty significant sentiment effect on the stocks. The e-commerce sector, as represented by EMQQ, is down close to 35% from its early in the year highs to its lows this week or last week. And but if you put it in perspective, again, I mean, 54% top line growth is incredible. I mean, there are very few companies in the world of any size that wouldn't feel quite good about growing at 50+%. I know that they've lowered the estimates for revenue for the full year, but if you put it in perspective, I think that things are still quite strong. And I think what Joe said on the conference call this morning was really how I would look at it. And the three things were, you've got 300 million middle-class Chinese consumers now. That number is expected to grow to 850 million in 12 years. So 150% rise in the middle.
They don't have debt like Americans do.
Yes, and so secondly, what he touched on were sort of financial services more broadly. I mean, he touched on debt and the ability for the Chinese consumer to lever themselves up, but it's also Alibaba is competing with all industries in China, and because so much of the economy is state-owned, the state-owned banks, for example, are susceptible to losing to newly digital customers, and Alipay, obviously an example of that. And then the final thing that he said, which really ties all three of these together, is the digitization of their entire economy. And the one number that I thought was most intriguing in the reports was the Hema markets.
Hema supermarkets, which is part of their big bet on physical
online to offline.
Online
that's right.
Retail,
And I was in Hangzhou 6 weeks ago and had lunch at a Hema market, and it's the one thing I saw on my most recent trip that just it's hard to explain to people.
It's a very unique experience. I was going to ask you to sort of paint the picture for us.
Well, it's like Whole Foods on meets the Jetsons. I mean, there's tracks along the ceiling, and elevators lifting bags up to go through a hole to get on a scooter and deliver it in 30 minutes. And the number that was to me most striking was that, and it's still a small part of the business, but 60% of their orders were online. So I don't know what the Whole Foods percentage is here in the U.S. for online ordering, but I'm sure it's not even 6%, if it's even 1%. So I don't think people quite understand the leapfrogging that's going on as these entire economies become digitized, because they never had bank accounts and a lot of the things we take for granted.
That said, as you point out, Alibaba is so huge, it spans industries. There's not, really any other player that can take it on directly as a competitor. Is it truly unhitched from the economy, unhitched from the future of the global economy and the Chinese economy, or is it even more hitched because it is so large?
Well, I think it's certainly hitched to the economy, but this is a secular change, right? Things are, in our worlds, we see this, whether it's Netflix versus traditional television, whether it's Google versus the newspaper. We've seen how these things have changed our world, but in the developing world, in emerging markets in China, that traditional consumption infrastructure doesn't really exist. And so you take this giant consumer wave, 9% retail sales growth for the country, but it's going onto the smartphone because most of the retail infrastructure that the malls that we have and so forth don't really exist there. So I think Joe is right that really the entire Chinese consumption economy, online, offline. In fact, they even said that they're dropping the word "e" from commerce because it's all the same thing to the Chinese consumer.
Kevin Carter, EMQQ. Thanks so much.
Thanks
for being with us today. Plenty more coming up on Bloomberg Tech. And do not forget, we are live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network TikTok on Twitter. This is Bloomberg. Tesla CEO Elon Musk says he probably would not accept an investment from Saudi Arabia now. In an interview with Recode, Musk criticized the kingdom's government over the death of journalist Jamal Khashoggi. Saudi interest in the car maker prompted Musk to tweet in August that he had secured the funding to buy out investors and take Tesla private. That post led to the Tesla CEO being sued by the U.S. SEC. Musk also told Recode that he uses Twitter with, quote, not much of a filter. And the SoftBank Vision Fund is shaking off criticism of its deep ties to Saudi Arabia. Masayoshi Son and his Saudi-backed investment firm have announced they're pouring more than $1 billion into a Silicon Valley window glass maker called View. Son was one of many business leaders who pulled out of a Saudi investment conference last month in response to Khashoggi's murder and hasn't formally commented on the situation. But he did meet with Saudi Crown Prince Mohammed bin Salman privately during that time. The Vision Fund has a $45 billion commitment from Saudi Arabia. Still ahead, staff take control at Google, pressuring management over its handling of misconduct allegations with a mass walkout. We'll discuss the state of leadership in Silicon Valley next. Plus, GoPro fallen the most in 10 months following its third quarter earnings report. Will the camera maker's Hero 7 be enough to bring it back up this holiday season? This is Bloomberg. Technology. I'm Emily Chang in San Francisco. Are Silicon Valley leaders under siege? On Thursday, thousands of Google employees walked out from offices around the world in protest of the company's handling of sexual misconduct allegations against some of its top executives. It prompted responses from leadership that Google is serious about drawing a hard line on harassment now and will look at demands for change.
Obviously, it's been a difficult time. There's anger and frustration within the company. We all feel it. I feel it too. It's at Google we set a very, very high bar, and we clearly didn't live up to our expectations, and which is why we felt it was important to express our support for the employees today.
But Sundar Pichai also signaled he remains in charge and won't be constantly swayed by staff uprisings. To discuss, we're joined by Bloomberg Tech Senior Executive Editor Brad Stone and Maynard Webb, founder of the Web Investment Network, also author of Dear Founder, letters of advice for anyone who leads, manages, or wants to start a business. And also, of course, Maynard, you have a long history in Silicon Valley. You were the chair of Yahoo. You worked with Marissa Mayer, worked with Meg Whitman for a very long time. Yep. What's been your reaction as you've seen all of this unfold at Google?
Well, first, bad behavior is should never be rewarded. So
let alone tolerated.
And so we need to continue to do a better and better job, obviously, to make sure we don't have this happen in our companies. I was super blessed to work with Meg Whitman at eBay, and she just made it perfectly clear to everybody, don't do a thing that you wouldn't want your mother to hear you do or say, or show up on the cover of the New York Times.
Well, and I wonder,
that set an amazing tone.
Google's problem has been that they didn't have women. I mean, there are a few, but they didn't have women in the top ranks for a very long time, and you saw a lot of executives getting away with bad behavior.
Well, I can't comment because I haven't been at Google on what people were doing to whom, but just in general, we need to do a far better job, as you know from the book that you wrote, of treating people well and not having these things go on in our companies. And when they do go on, they have to get addressed immediately and quickly and with transparency.
Brad, it is good to see Sundar out front. He went to the Deal Book conference. He spoke to Andrew Ross Sorkin as this walkout was happening, literally as the walkout was happening. And he talked about the anger that he himself feels. And also said that he doesn't run the company by referendum. And even though employees feel empowered, that's not necessarily going to determine how they lead the company. So how do we square that?
Well, I think Sundar's in a fortunate position here because with the way all this unfolded, Andy Rubin, who was really Sundar's primary rival to succeed Larry Page as the CEO of Google, Andy Rubin left the company in 2014. Sundar was elevated to CEO the following year. A lot of the inappropriate, allegedly inappropriate behavior did not happen under his watch, right? So he's able to share in the outrage of the employees. He's able to endorse the walkouts. He's gotten really on the side of the internal protest here, where what the difficult decisions will come where he has to basically address some of these 5 demands that the employees have, like ending forced arbitration. In principle, it's good. It could open up the company to liability, so the tough decisions for him still remain.
Well, and it did happen on Larry Page's watch, who is still the CEO of Alphabet and Sundar's boss.
So probably some awkwardness there, but Larry, it's one of the virtues of this situation he's created with Alphabet that he doesn't really have to publicly, or he won't publicly address these things.
In general, Maynard, have you ever seen in Silicon Valley this kind of employee outrage, this kind of employee organization? And it's not just happened at Google. We saw Amazon protesting their shareholder diversity rule. We've seen Microsoft employees protesting their work with the U.S. government.
No, I think this is all new ground for Silicon Valley, and I think employees want a voice, and they've always wanted a voice, but more than ever, they want to share that voice, and they want us all to make sure we're using our technology for good, and that we're treating people the way people should be treated, with dignity and respect, more than ever. I don't think I've been around a long time, and hopefully I have treated people with respect all the way through that journey, but it feels more visceral now to our employees when we're not doing that.
Brad, it feels like a strange contradiction, because I know, you and I as journalists, we hear these things, you get tips, and so much of this was an open secret. And employees knew these secrets, and yet now we're seeing this outrage.
Well, what changed were the times, right? With the Me Too movement, with your book, what was sort of known and perhaps quietly accepted now becomes sort of outrageous. A lot of these founders very deliberately set up their corporate environments to look like academic environments, schools, and now they're seeing the other part of that, which is, students, protest and want to have an impact about how universities spend and invest, and now employees are doing the same. They're finding their voice.
These founders, and Larry and Sergey really paved the way on this, have also set themselves up to be untouchable. They can't be voted out. They've got the most voting power in their companies. Mark Zuckerberg is the same way. And now, Maynard, we're seeing calls for Mark to be more transparent, and even questions about whether he should still be leading Facebook amidst its challenges.
Right. Well, first of all, I see him becoming more and more transparent, as he did on the earnings call this week.
Right, and he's doing phone calls with the press, which he never did.
Exactly. And so I think that's all good. And yes, he may have more control of the company than a lot of public shareholders would like him to have. But he still has a board, and if, you know, over time, boards are accountable to hire and fire CEOs. And
but don't you think he has the whole board in his pocket? I mean, they're all Mark loyalists.
Yeah. Well, I don't know the board, and I don't know exactly how they operate, but I know that Mark needs to continue to move the company to a better place, and if he's not, I'm certain that the board will have to figure out what to do there.
You know,
I'm not trying to, you know, I'm not speaking on behalf of that board. But
there are these open-ended questions thrown out there. Should Mark Zuckerberg still run Facebook? I mean, in any world, Brad, do you think that wouldn't be the case?
Well, I mean, let's step back and look at why founders have amassed such power. In a way, it was to like insulate these companies from all the short-term demands of the market. And look, with that control and that protection, Mark has built an enormous franchise, and enormously successful franchise. And yeah, there have been plenty of bumps in the road, but I think he has earned the leeway to continue to guide Facebook.
And I couldn't agree with you more that if you look at where it is today versus where it started, it's been an amazing run, and it wasn't without bumps. Mm-hmm. And we need to figure out, and I'm sure he will, and his board will help, and his executives need to help, how to traverse this next set of challenges and bumps. And if he doesn't, you know, you're going to, you know, revenue will be impacted, the noise will grow. These things have a way to, you know, work themselves out.
Facebook had what some thought was a sort of an awkward earnings call. You heard Mark and Sheryl stumbling a bit more. We've heard Tim Cook come out and challenge Facebook and Google basically directly about their business models. What do you make of the tech smackdown happening? I mean, I guess it's happened before. I mean, Larry Ellison and Bill Gates and Steve Jobs, they had their
Well, I was at Bay Networks when Cisco used to go recruit our employees with planes flying through the campus. We weren't always friendly, but I think it's way more open today. And frankly, I just would rather see companies focus on making their business better than smacking down a lot of other companies.
Brad, it seems like Facebook, investors, analysts seem to consider Facebook to be the most vulnerable of the big tech giants. And now, you know, Mark has said, we're going to make another big transition. First it was desktop to mobile. Now it's mobile to
stories,
videos, stories, you know, exploiting the messaging systems that they've bought. Is that a transition that Facebook can successfully navigate?
Well, I mean, I do think that there was an effort on Mark's part to be more transparent in the earnings call. I liked how he referenced YouTube and iMessage. Talked about maybe it taking to the end of 2019 to get a hold of the fake news problem. You know, can they be successful? I think with the track record, you know, you look and you say they've you know, successfully navigated a couple of very hard pivots. I mean, this is an existential test, and you know, I don't know. I mean, the one thing I will say, and the reason maybe people are skeptical about Facebook, is that social networking does tend to be kind of governed by fads, and you sort of implicitly feel that some people are getting tired of Facebook Classic, maybe moving to Instagram or Snapchat or elsewhere. So that's a risk for them.
Maynard, when it comes to leadership, a lot of things always remain the same, but some things change, and maybe the expectations of leaders in, you know, the next tech era have changed. So how? Well,
number one, there are no quiet moments. You know, where you used to be able to go home on a weekend maybe and be with your family and be alone. Everything you do every day, somebody's videoing or listening.
Partly because of Facebook.
Yeah, well, or Twitter, and you know, I mean, there is no quiet time, and the work has blended between work and home so much. You're always on, and you're always expected to be representing your company. So I think the pressures are much more intense today, and always on, and your expectation of not just running your business, but doing things in a humane manner and making sure you have a voice that's representative of far more than just your company. That's all different.
All right. Maynard Webb, Webb Investment, also author of Dear Founder. Thanks so much, as well as Brad Stone. Thank you. Okay, Google's top lobbyist in Washington is stepping down. Former U.S. Republican House member Susan Molinari, who joined Google almost 7 years ago, will transition to an advisory role in January. During her tenure, Google became one of the biggest spenders on influence in the Capitol, as it fought for net neutrality and government contracts. Molinari's departure comes as the company battles claims of bias against President Trump and the Republican Party. Coming up, GoPro tanking following its third quarter report. How CEO Nick Woodman expects to restore profitability with its core camera business. Plus, Kohl's is outperforming the S&P 500. How the U.S. department store chain has learned not to fight the Amazon era, but embrace it. This is Bloomberg. GoPro shares are taking a hit after posting weaker than expected outlook for the holiday season. While the camera maker beat third quarter revenue estimates, it gave a revenue forecast of just $380 million for the current quarter compared to the $393 million that analysts predicted. GoPro shares fell the most in 10 months after also reporting gross margins that missed estimates. CEO Nick Woodman told Bloomberg's Selena Wang that he's confident about the holiday season.
In the first 30 days post-launch, Hero 7 Black, our new flagship camera, has gone on to become the best-selling GoPro ever. And our other products, Hero 7 White and Hero 7 Silver, are selling in line with expectations, and we're very confident we're going to have a great holiday quarter.
But let's go beyond cameras. Now, obviously, the drone market was very difficult. There's a lot of regulatory challenges. But how are you thinking about entering potentially other adjacent markets that are attractive to your consumer? For instance, wearables, augmented reality glasses?
Well, for the time being, we're very focused on our core business of helping people capture and share their active lifestyles. We're seeing growth in our core business. We're predicting 5 million total units of sell-through this year, which is up 16% year over year. And in the fourth quarter alone, we're seeing 50% higher sell-through than last year. So GoPro's core business is growing, and we're making investments in new types of cameras like our Fusion 360-degree camera, which has 47% of the 360 camera market. So we think that we have enough growth opportunity and potential to restore profitability to GoPro just by focusing on our core business.
Now, trade tensions with China are ongoing, and the company mentioned in the call that if the cameras are included in the tariffs, you would actually move production out of China next year. Now, if that were the scenario, where would you move production, and how would that impact costs?
Well, what we shared on yesterday's earnings call is that we are prepared to move production of our U.S.-bound goods out of China in the first half of next year if we're forced to do so. But we're not making that decision yet. And to date, we have not been included in tariffs, but several consumer products companies have made a case to be excluded from tariff lists, and we're working on that. So if we are included on a list, we're focused on seeing if we can be excluded.
But in preparation, what countries are you looking at aside from China?
We're not sharing that information at this time.
Now,
we do have a plan should we have to exit China.
Now, I want to talk about margin expectations. They were a bit lower than what the street expected. You've already reduced headcount pretty dramatically. But how are you thinking about that revenue per employee number? Will we see more restructuring?
No. GoPro, we are looking at a very successful holiday quarter for GoPro. We're now 1 month into the holiday season. As I mentioned, Hero 7 Black is the best-selling GoPro ever in its first month of sales post-launch. Our Silver and White products, our $199 and $299 products, are selling in line with expectation. So the sales trends are clear. Looks like we're going to have a successful holiday quarter for GoPro, and that sets us up with low channel inventory exiting the year, which is a great setup for a profitable Q1.
When we look at camera sales, how much of that is from refreshes from existing users versus reaching a new base?
All right, we've shared that roughly half of our users of the GoPro app are using 4 to 6-year-old GoPros, Hero 4s, Hero 3 Pluses, and Hero 3s. So we have a lot we can do to excite our customers to upgrade. The majority of our business has been attracting new customers, so that shows that our marketing teams have been doing a really good job of attracting new customers globally. But with Hero 7 Black, it's just anecdotal data, but we're seeing a lot of social commentary about customers being excited to upgrade, and those that have upgraded to Hero 7 Black are socially sharing that they're really happy with their purchase. So GoPro is a virally driven business, and so far the social commentary is doing quite a good job of driving our business this holiday.
Now, last time we spoke, you talked about potentially partnering with larger organizations to help the company scale, and since then you have signed agreements with Jabil and Adobe. But what about partnerships with consumer-facing companies that can really extend the brand further?
There may be opportunities, but this year, as we've shared, we've narrowed our focus to super serving our core customers, and we're seeing growth in the business. As I mentioned, we're looking at growing total unit volume sell-through up 16% this year to 5 million units of sell-through. GoPro will be profitable in the fourth quarter, and we believe will be profitable for the second half of the year, and we believe that we can be profitable in Q1 of 2019. So we're right where we want to be.
Now, I want to talk about this Plus subscription product, which just gives cloud services to your customers. How else are you going to add value to that program to make the user want to pay a monthly fee on top of the quite expensive camera?
Yeah, we've been quite successful with our Plus subscription service so far. Last quarter, we grew 16% sequentially to 185,000 paying subscribers, and we're going to be testing more pricing tiers and more benefits to enhance the value proposition for our customers and find a program that really clicks to drive that subscription rate further.
That was GoPro CEO Nick Woodman with Bloomberg's Selena Wang. Coming up, with the holiday season around the corner, Kohl's is on track to outperform peers like Macy's and Nordstrom. We hear from CEO Michelle Goss next. This is Bloomberg. U.S. department store Kohl's has been on something of a tear this year. The stock up almost 40%, far outperforming the S&P 500. As the company launches its holiday shopping campaign, Bloomberg's Emma Chandra sat down with Kohl's CEO Michelle Goss. They kick things off with an update on Kohl's pilot with Amazon, where customers can return Amazon products in Kohl's stores.
Still very much characterize this as a pilot. We have expanded modestly, so now we are in LA, Chicago, and we recently expanded into Wisconsin. So we're about 100 stores as it relates to where customers can bring their returns into Kohl's. And it's a great benefit to customers because they don't have to package it up. It's free. They don't have to ship it out. All they need to do is bring in their goods, and it's a very seamless process. You know, when we started this, one of the first things we wanted to test was, would the whole operation work, and would customers use it? So feel like we've checked that box pretty well. Now we need to make sure that the entire proposition for both us and Amazon is a sustainable idea for the long term. And that's why we're taking our time to test it.
But are you seeing that it might be driving traffic? Are you having more people come into Kohl's stores because they can return an Amazon product?
You know, we're still in the throes of the analysis. Again, we do our homework around this. We're up now against a very important season for holiday where there'll be lots of packages out there. So that'll be a true test for us. Like I said, what I can tell you is
you might be making a definitive decision after holiday.
I can't say that, but you know, I do want to get this holiday behind us. I know Amazon does too, and so we'll look to hopefully sometime next year. And to your question, we do have customers using it. I think the opportunity is it enough of them, and then does the whole economic model work for both Amazon and us?
Do you think if you continue with it, it's something that is going to help diversify your customer base? You've spoken before about wanting to encourage more millennials to shop at Kohl's.
Yeah, so that's a great question, and we are deep in the throes of studying that as well. I am hopeful that it will do just that and broaden our customer base.
Now, I think half of your CapEx for 2018 has been devoted to IT. How much of that is about driving the online customer and indeed the online customer when it comes to mobile?
That's a great question. Technology is really fueling everything we're doing. Certainly a big portion of it is fueling the digital experience, and that's mobile first for us. But we're also investing a lot in our stores. We have a lot of innovation happening both back of house to help our associates be smarter about their store, and then also front of house. Like we just started testing self-checkout, which makes it really convenient. That's just in 2 stores, but if that works, I could see rolling that out. It's also, we're in big investment in marketing. Big strategy for us in marketing is personalization, especially as we start talking about segments like the core customer, millennial customer. They might want different things. So you need to have the data, big data as they call it, and then you also need to have the machine-based learning to serve up the content that's going to be relevant to those unique customers.
So is the store customer still perhaps more important to you than the digital customer at the moment? Do you see the digital share of sales increasing to a greater number than, I think it's at 15-16% at the moment? How high could that go?
Yeah, they're both important. I mean, critically important. Clearly today, the majority of our sales happen in our stores, but we see digital as a growth engine. It's a growth engine not only in its own right, but it's also a great avenue to attract new customers.
And are you doing anything in particular when it comes to holiday to attract or to compete for that customer online? There's a lot of people who are trying to drive people not only to their stores, but also to their websites.
Yes. And again, for us, I believe Kohl's wins when we have the customer engaging with both channels. And we have a lot of things we're doing around that, like buy online, pick up in store. Now we have buy online, ship to store to make most of our inventory available to pick up in the store. But in terms of actually reaching the customer digitally, one of the things I'll tell you is from a marketing standpoint, we're leaning in even more into digital channels. So this year at holiday time, 50% of our spend will be digital. And that's the highest we've been.
And when you're leaning in, are you talking about advertising more on social media, that type of thing?
We are, yeah. It's all forms of digital. It's search, it's social media. We have some real fun partnerships with things like Pinterest. So across multiple channels, I think it's a really thoughtful plan.
Kohl CEO Michelle Goss there with Bloomberg's Emma Chandra. That does it for this edition of Bloomberg Technology. I'm Emily Chang from San Francisco. Have a wonderful weekend. This is Bloomberg.